Welcome to the Real Money Show, brought to you by Guildhall Wealth Management. Today we're going to deal with hard assets, physical gold, physical silver, and we have a motto: if you can't hold it, you don't own it. The website, guildhallwealth.com, the phone number 1-877-8-SILVER, and I'm joined by Darren Long. How you doing, Darren?
I'm well, Jeremy. I thank you for asking, and I'm happy to be here. It's been a great week.
Great. I want to start today. I know we're going to talk about a lot of stuff today, but I want to start with a quote from Maxime Bernier. And you know who he is, yes?
Of course.
Okay. So he said central banks are printing massive amounts of currency to prevent the economy's collapse under the weight of debt, and that the fiat money system is bankrupt. He goes on to say, the gold standard forces politicians to be fiscally responsible. The Trudeau government is spending money every day that we don't have. But in the end, we will have to pay, and the price will be inflation. Wow. The leader of the People's Party of Canada is speaking truth, my friend. What do you think?
Well, again, I mean, he's always been a proponent for free markets, and there is enough evidence to suggest that it doesn't matter what side of the fence you sit on about Maxime Bernier. It's not, we're not here for that reason, but it's another voice that's trying to clarify the significance of the situation we find ourselves in. And again, first, a big congratulations to those that came aboard this week, and in doing so have added this hard asset to their portfolio, because what they've now realized is what we have been talking about for so long, Jeremy, which is the fact that there are so many Canadians in the dark right now in understanding and comprehending how serious a change in our day-to-day lives there has been, will be, and if we don't have a voice, if we don't make good decisions, and if we just don't care enough to get rid of the passive attitudes that we have and challenge the norms and get back to some resemblance of normalcy, including the way we think about our wealth, well, then we're as good as going to be walked over. And this debt and this big wall that's coming, this wave of debt we're going to talk about on today's show, it's going to drown good people. And in doing that, it's going to have so many people lose houses, lose their incomes, and they're not going to be able to return to the lives they expect to have and deserve to have as Canadians. And that's a very alarming thing when we have to go from talking about having gold and silver as a great way to ensure your wealth and grow your wealth to saying that we think that there's very little that you can do outside of gold and silver right now that's going to be beneficial long term over the next 2 or 3 years because of what we see lying ahead of us.
Well, we'd like people to be involved in the physical market. We've been in this market since 2002 at Guildhall, and we've seen the results. I mean, when we got involved in this, as you know, Darren, the price of gold was under $300 an ounce, and in silver it was less than $5 an ounce. We've seen incredible gains over the years, and really, I shouldn't say gains, because what it is doing is protecting against the devaluing of the currencies. So when we see an average gain of gold, for instance, over 10% a year since basically 2002, that's really a reflection of the loss of purchasing power of the Canadian dollar. And so I think it's important for any Canadian who cares about the energy that they're putting into working every day, that they want that full piece of the pie at the end of it. You know, it's one thing to pay taxes, it's another thing to have your piece of the pie eroded by inflation. And I think that's what Maxime Bernier is making quite apparent. And so for us, physical metal, we know, is one of the best ways to hedge against inflation. Darren, for you, what are you making of, I'm starting to hear a little bit of debate between this idea of inflation versus deflation. Do you think that ultimately matters as someone who is holding precious metals? In other words, if I'm a precious metals owner, do I really care if there's going to be inflation or deflation?
Well, again, too, there could be various reasons as to why you own gold or silver. And if you're looking at it from the pragmatic standpoint, which is just the basic assumption that diversification is a valid thing for your portfolio, and without giving any financial advice or being a planner or anything of that nature, just saying, hey, listen, if I can be diversified, I'm probably going to be more likely to be able to weather the storm in any down or upward situation. From that perspective, I think gold does its job no matter what market you're in. Some will argue that deflation could be misunderstood as far as gold prices are concerned, and many will argue that inflation almost certainly inevitably means we are going to experience much, much higher gold prices, because historically that's exactly what we've seen gold do, which is traverse much, much higher under the threat of real inflation. But the argument, Jeremy, for holding gold is still there, no matter whether you experience deflation or inflation. And quite frankly, in this atmosphere right now, there's no individual out there that isn't plugged directly into a central bank or into a banking institution that can really say with certainty whether or not we're experiencing deflation or inflation. I go out, I shop every day, I'm looking at my bills, I'm looking at what I'm paying. Barrel of oil is still relatively low. It's sitting not historically low, but not far off of that about a month and a half ago, that point where a barrel of oil went negative, and yet a liter of gas at the pumps is just under $1. How is that? That's completely inflationary. We're not experiencing the true value that we're meant to get out of situations like that. And that's because this whole scenario has been skewed. So that does lend itself well to this argument that gold is, in fact, going to do its job, no matter whether we do experience real, true Japanese-style deflation or whether we truly experience long-term inflation. The argument on the table is either way. That's an extreme scenario, an extreme situation that goes away from the center norm, and it is the argument for holding gold and silver in your portfolio.
Yeah, I think that, if the stock market's falling and gold is staying put, or real estate's falling and gold is staying put, or costs of gas is going down and gold is staying put, I think that is definitely a pro to having gold in your portfolio, because ultimately it's still storing value, whereas the value is being eroded in other places. And that could be for beneficial things, like if gas is low, that's great. But if the stock market's going down, it's not great. If debts if there's the end of a debt cycle and all of these asset bubbles are starting to burst, and they're falling in value, but gold is holding up, both gold and silver, then then it's hedging against deflation quite well. Let's talk about, in the next segment, Darren, how undervalued silver is right now. It's a topic we've discussed in the past, but it's particularly poignant given what we're seeing right now with the gold-silver ratio. The phone number, 1-877-8-SILVER, the website, guildhallwealth.com, and you're listening to Global News Radio, 640 Toronto. Welcome back to The Real Money Show. 1-877-8-SILVER. Guildhallwealth.com is the phone number. And Darren, we need to talk about silver. We're just starting to get some physical silver back into the market. For those who go onto our e-store, guildhallpreciousmetals.com. So we've got things like 100-ounce bars, kilo bars, some 10-ounce bars. We did get some silver maples in. So those who have been waiting very patiently, we do have some physical product available. Maybe not in massive quantities, but certainly for someone who's looking to pick up a monster box or a few 100 ounces here and there. Yet there's this strange thing happening in the market, Darren. There's very little product out there. There's these massive premiums, and yet it still couldn't be more undervalued than at any other point in history. So what do you make of that? And when is it going to fix itself? And at what price is it going to fix itself?
Well, first of all, the supply chain in gold and silver is very misunderstood. There are very few companies out there that exist that can accurately discuss how a supply chain works. They cannot discuss and tell you anything about where the gold is actually coming from, how it's made, fabricated, what it goes through to get fabricated, who's touching it, how many people are touching it, what it takes to get it to you. That whole part of the system is something that's very quiet, sometimes even misunderstood in terms of the dealers and the wholesalers themselves. but it is a problem right now, Jeremy. There's no two ways about it. We have not seen since the entrance of this massive pandemic in March the very, very simple truth reveal itself. We don't know whether PAMP and Valcambi and Argor and the Royal Mint are back to anywhere near their normal 100% capacity. We have an idea, but they're not releasing reports on a regular daily basis. We're getting what we get because that's what's available, Jeremy. And rationing, although it's been here a long time, it's certainly connecting us to the reality that gold and silver may, in fact, unfortunately, as undervalued as they both are, and silver in particular very undervalued, they're keeping us up to speed on this idea that we may not see a return to normal spreads in the market. So you have to get used that you're getting the value that you're paying for as opposed to what you think it should be priced at. It's just the market responding in the natural course of things under supply and demand duress.
Yeah, I think that it is a difficult market to understand in the sense that, the futures market complicates things very much because you had these entities that were shorting the market, basically expecting the price to go down. When the price did go down on, I think it was March 23rd or 22nd, I think people were piling on to the short side, and then all of a sudden the market reversed, and you had these major banks that were getting into financial trouble because of it. I think HSBC had to be bailed out by the Bank of England, if I'm not mistaken, to the tune of like $200 million. We find out Scotiamakata ended up closing its doors. Yeah. I just read something on Kiko yesterday saying CIBC also was in trouble on that getting pinned on the short side. So all of a sudden the market goes up, and I think to exacerbate the problem, there's also this demand all of a sudden for actual physical delivery against the futures contracts, which are run on this very thin veneer of actual physical product. So whether it's negligence or they just don't know how to regulate it properly, or people or entities are sidestepping the law, obviously, on the demand, someone is sucking up physical metal somewhere. And it really doesn't matter whether or not PAMP Swiss or Royal Canadian Mint gets back up to 100% production capacity. We are still going to see these massive shortages for quite some time. So now we end up with this dichotomy between spot price, which is basically meaningless now, and the actual cost to buy the physical bullion. So silver spot price might be less than $18 an ounce, yet it's going to cost you $21 to buy it. The question becomes, should you wait for a lower price? Well, that's where we're saying you have to look at the ratio. The ratio is still, I think, way over 90 to 1. Should be historically 16 to 1. I think the norm over the last 50 years is like 60 to 1. So it's incredibly undervalued right now. The fact that there's none out there and the price is low, I think you're splitting hairs between being able to buy it at $19 an ounce or $22 an ounce. Wouldn't you agree, Darren? Like what's $3 in the end if the price of silver has to normalize at some point, probably in triple digits?
Well, that's just it, Jeremy. It's accounting for the fact that the truth is we all are in a situation with an opinion, and it's just an opinion, and opinions are worth a dime. The realities are what matter, and we've always maintained something very simple. You talk about the idea with physical assets that if you can't touch it, you don't own it. Well, the fact is the fact. Since this economic bubble burst, we've seen so much of the actual real physical assets get bought up by the rich and the wealthy and the 1%ers and the 10%ers that what's left over is being held in the form of debt by the small person. So even if the stock markets return to some norm, or even if there was a panic, shock, pandemic, came, went, it's virtually over with, it didn't end up being as bad as everybody thought. The idea of being diversified and holding this asset protects you on both sides of that equation. Having gold is a smart thing. You don't have to take our word for it. Educate yourself. Become the professional. Self-direct your wealth. Do whatever it takes to understand this, but take the time to find out more, because gold at 10% per year, how can you avoid that in your portfolio? It's 10% on average every single year, hand over fist.
And what do you think about silver? Is it incredibly undervalued? Do you think it
That's
could
where
be
you're undervalued.
a triple digit metal?
Yes, silver should be. Right now, as we speak, there is no argument in the world that anyone could make to me that would persuade me to think other than what I truly believe, which is that silver, even with all of its problems and you said shorting the market and people wanting to suppress price and the alleged manipulation, all those things, even with that in mind, Jeremy, right now, with gold sitting at where it's at, silver should be sitting very close to, if not above, the mark of, let's say, $31 on paper. I mean, that's fair. That's fair given where we've been in this marketplace. And that means it's just very undervalued. It's so undervalued. But again, Jeremy, it's balance. It's balance. We never put our eggs all in one basket. It's the idea that if you're going to have some hard assets and you've got some money to spend and you've decided you're going to pick up on some precious metals, it is wise to think of a combination of both gold and silver in that portfolio, especially when you see something like silver that comes as one of the most undervalued assets in the world today.
And let's talk about getting into the market, what you can expect getting into the market, the types of premiums, etc., and what's the best way for someone to get started. The phone number 1-8778-SILVER, the website guildhallwealth.com, and you're listening on Global News Radio 640 Toronto. We'll be right back. Welcome back. The phone number 1-8778-SILVER, the website guildhallwealth.com. Darren, we were just discussing before the break there about silver being undervalued, this idea that, don't worry too much about the spread. The paper price doesn't exist. It's what you can actually get it for. It's actually getting it in your hand that's key here, because if you're looking at the end of a debt cycle and all of this money being created by governments, it's not going to do well for the currencies, and you need to protect that. You've worked really hard for your wealth. You want to protect your wealth. If it's not nailed down, it's going to be taken from you. So precious metals have always been a great hedge against inflation. We talked about the idea of it's also a great hedge against deflation, because it's still holding its value while other things could be falling in value. Now, Darren, can you share with our listeners some of the ways that people can get involved in holding physical precious metals? And also, what would you say to someone who's looking to just get started for the first time? Where would they begin?
Well, beginning the whole process is setting up a time to speak with us. It's arranging a time, putting 20, 30 minutes aside of your day, evening, whatever time is best for you, to just really learn the differences between what gold and silver are, what they've done, what type of products there are available, and really to understand what it is we do versus what you might see as a collectible or a numismatic. Because people want to ask those questions all the time. Is it pure? Is it 24 karat? All these questions that kind of relate to their understanding of gold as jewelry or silver as jewelry, but not gold or silver as an investment. That's the place where you start. That consultation will open your eyes to the ways in which you can hold it. And it's as easy as saying, I'd like to spend 5, 10, 20, 100,000, and I'd like to just take some gold home with me. Okay, fair enough. No problem. We can set up an invoice for you. You can buy some physical bars of gold. You can pay for them, and we'll ship them right to your door. That's very easy, plain. And when you're ready to sell, you simply bring it back to us. We'll cut you a check right there on the spot, and you can walk away. There is also the option, Jeremy, of taking that a step further for those that want safety of storage, be able to buy and sell on a phone call, don't want to have to run to their safety deposit box to get their product to bring it back to sell. They can store it at the depository, have access to it. They can visit their product anytime they want and make changes to it. They can buy and sell and still stay in that actual account. And that's our depository account. It's easy to set up, and the only ongoing cost of that is your cost of storage, which is very, very minimal in comparison to your value and what you get back from it. We don't charge extra for you to have that account. We don't charge extra for our ongoing expertise, for the input that we give about the markets, for the newsletters we share, for all the hand-holding that we do that we want you to use to become knowledgeable. And if you really like that concept, take it a step further. Put it into a TFSA or an RSP or a LIRA or RIF or RESP. Jeremy, we are always talking about the power of using these benefits to our advantage. And here we are in this modern day and age. We can put gold and silver into registered accounts.
Yeah, I think at the end of the day, what people are looking for when they're getting involved in precious metals is they want to know that what they're getting is the best quality, that their liquidity, the ability to sell it down the road is assured, that they're not going to have an issue with that, and that it's theirs, right? So when they're buying direct, it's theirs. When they're holding it in the vault, allocated, segregated, access to their product, they know it's absolutely theirs. And we continue that with the registered accounts. So it's LBMA approved product, meaning it's globally recognized brands that make that ability to sell right there. It's as easy as pie. Things like Royal Canadian Mint, Perth Mint, Pamp Swiss, Valcambi, these types of things. And then we allow people to actually acquire it in their registered accounts, as you mentioned, RSP, Lira, LIF, TFSA. And then it's stored in an independent vault facility outside the banking system, right? Sub-account at the vault. Their product is separated from all other holdings, and they get the bar numbers. And then they have access to the vault to go and personally audit their holdings. Or if they're, further away in the country outside Toronto, they can get a video audit or they can get a photo audit so that they can see the bars themselves, see the serial numbers, and that's as close as they can get at the time to holding it in their hand. And I think that having that sort of recourse is so important in today's market. You want to make sure that you are not going to be caught holding paper at the end of the day, that what is actually being held is yours and it does not belong to anybody else. And that's what we're offering in these registered accounts. So if you like the sound of that, then give us a call, 1-877-8-SILVER. As Darren mentioned, contact us, sign up for a consultation, schedule that consultation, and we can walk you through the various ways to get involved in the market. The website is guildhallwealth.com, and we've got a lot more to talk about, Darren, on the next segment. So stay tuned. It's the Real Money Show on Global News Radio, 640 Toronto. Okay, this is going to be a very exciting segment. If you've been listening so far, buckle your belts. We're back with the Real Money Show. Darren, just before we came back, we're discussing this disconnect between sort of what's going on in reality in the real world and the stock market. It seems to be levitating. And you said something very interesting. You said we might see a V-shaped recovery. And I think we're only 8% off the all-time high in the stock market. But you really think we're going to see a V-shaped recovery in the stock market?
Yeah, let me isolate that because I'm really only talking about the stock market, Bay Street and Wall Street, not mainstream. We'll talk about mainstream in a second, but the truth is, from what we would consider to be the virus-induced low on around the end of, it was just the tail end of March, around the 23rd or so, stock markets have just had the best 50-day run in history. As in ever, as in their entire existence of time. The gains have been 40% or better in the Dow.
Those type of major recoveries or incredible gains in history come after a massive fall in the market. And typically, when you would use that analogy of taking an escalator up and then the elevator shaft down, and usually that type of technical damage takes a very long time to fix itself. We've seen that in the precious metals market, although it's different these days in the precious metals market because people know that the paper price is fake, and so it responds so quickly. But is that what's happening in the stock market? Did people sell off and then all of a sudden buy back? Because I got to think it's central banks that help make that the fastest run ever.
Well, of course. Listen, there's no two ways about it. That's exactly what happened, and that is exactly what will continue to happen. These historic bounce back moments, which we've never seen before in our history, and yet alone never experienced probably before, because we weren't around the Great Depression. We haven't seen things like this, are at odds of each other. And those that are expecting worse to happen are so surprised, and it's happening in the real estate market and other areas when they're seeing new highs announced, and yet we're told and we're led to believe that there's a bubble bursting here, that this huge stock run that's built up has been burst. But you have to isolate where the money's coming from, Jeremy, to understand where it's going. I mean, it's all at odds with what you see around you. And I mean, if you're walking past all these shuttered stores, eateries, and looking at historic stats about job loss and economic declines, and millions of people on the dole are unable to pay their mortgages and so forth, this is at extreme loggerheads to what you're seeing in the stock market. And again, it leaves the average person wondering what the heck as they sit there on their couch and their joggers absorbing in the last 2 months, trying to do the best they can to work from home. It's really unfortunate, but the rich hold assets and the rest are just holding debt. And those assets, as you just said, they've been massively supported by central banks and governments at all levels who chopped interest rates, spent trillions trying to buy up all the negotiable securities like government and corporate bonds. They dumped trillions more into the hands of consumers and businesses to replace money lost in wages and profits. Meanwhile, all the consumer and mortgage debt remains to be paid. It's just deferred. It's still owed. And the lenders are all going to be made whole, Jeremy. So when you juxtapose that against what is really happening out there, Canada's new increased debt load went from what was expected to be prior to the pandemic, a jump of $25 billion, which in and of itself wasn't good to begin with, to a new debt load of around $300 billion, which is
right. So
never seen in our history of time.
Right. So basically, yeah. And if you look up the Federal Reserve balance sheet, and if you look up the Bank of Canada balance sheet, just go on to Google, look up those things, and you see that what happened in 2008 was like a little hill, and what's happening right now is this gigantic mountain. That's what the debt load is. That's how much they've exploded their balance sheets. So of course there's going to be a V-shaped recovery in the stock market because they're supporting the stock market because apparently, you know, it's a psyop game. It's if the stock market looks great, then the economy's great. I applaud the government for doing their best to help, but ultimately we are going to pay for this. We're going to pay for it big time. So just to bring it back to our very first segment, the fact is you can't just throw all this money out into the ether and not expect inflation to rear its ugly head at some point. And between that and the violence that's erupting because it's an election year, there's just so much things in the States. There's just so much stuff happening right now. There's a lot of fear out there. And I think people have this window of opportunity, finally, to be buying precious metals. And I don't think that they should be dissuaded by the fact that there's high premiums all of a sudden. We need to stop thinking about spot price, thinking about, can I get some in my hand? Is this price going to be much, much higher in the future? Look, I mean, the numbers out there on gold are massive. I mean, people are talking about 5,000, 7,000. People like Jim Sinclair is saying that it could go to 50,000 plus based on the debt versus the gold ratio. Silver, I truly believe it's going to be a triple-digit metal at some point. There's just too many uses for it. The shortage of it is just too obvious at this point. So I think we're all getting a gift right now to be able to acquire it. So we encourage people to get some physical metal in their portfolio. And to do that, all you have to do is contact 1-877-8-SILVER or go to the website guildhallwealth.com. There's a lot more coming up on The Real Money Show with Global News Radio 640 Toronto. Welcome back to The Real Money Show. The phone number 1-877-8-SILVER, the website guildhallwealth.com. Darren, we have been talking about the metals. We've talked about it as a hedge against inflation. We've talked about the fact that silver is incredibly undervalued. We've talked about this V-shaped recovery in the market, which is obviously a positive thing. But, you know, people are first of all, they're tired of quarantine. We don't know the extent to which the economy is really going to be impacted. I personally think politicians don't want to look at what that's going to look like. They watch TV, they're on social media. It's nothing but violence and disruption, and it's just crazy. It is a crazy, crazy time. Emotions are running high. And I just feel like I want to push across to people that precious metals is truly an opportunity right now. It's not about you buy it because it's doom and gloom, but because of the fact that there is some incredible opportunity. For example, looking at the first decade of the 2000s, 2002 through 2011, gold went up while the stock market was going up. And when quantitative easing hit, which we're in quantitative easing to infinity right now, gold did very, very well. And I just think that that's what we're going to be looking at over the next decade. So this is a great opportunity. This is something right now that people can be happy about, no?
I think it is something that people ultimately will long-term be happy about. But understanding this is picking a battle too, Jeremy. As an investor, I often have to think about what is best for my family, what is going to be the best outcome. And sometimes I'm fighting and struggling with the notion that I'm looking at these traditional markets. They need to be part of my portfolio. I'm not the people listening. I'm not giving them financial advice or planning. I'm talking about my own portfolio. And struggling to find that right balance simply means I still am acknowledging the importance of making sure quality assets and quality long-term assets are part of my portfolio. It's why I own gold, and it's why I own silver. It's why I own natural fancy colored diamonds, because with all of this out there, Jeremy, it's hard to say what is actually going to impact us long-term, short-term. Is this a few-day thing? Is there a V-shaped recovery? Is there not? Do I go to cash? Do I not? Well, what history has told us, Jeremy, is that gold and silver have been there. They've survived well through every type of market possible. Boom, bust, recession, depression. They've been there. They've done that. Thousands of years of history, and it's not going to change. Why would it change? It's going to be the same thing again. We'll get back to the norm. The credit bubble will be repurposed, and again, will grow somewhere else. And when it does, we'll see another bursting and another threat of inflation, deflation, recession, depression. And again, like you said, when we were talking before, gold and silver can rally in the best of conditions and in the worst of conditions.
Well, Darren, I think many people can relate to the idea of not knowing what the future can hold, and how do you balance your own portfolio in that regard, and having that understanding. You know, for me personally, I don't see precious metals as an investment. You're owning an asset. It could be part of your financial portfolio, sure, but ultimately it's not an investment because you're holding that asset, right? Investing implies there's some sort of counterparty out there. So if you're buying Apple, you're assuming Apple is going to produce a good product, sell a good product, and have good management to profit well on that on both sides of the equation. Whereas when you're holding physical precious metals, it's nobody's liability, right? So it's just a great place to store wealth. And that's why when you're out there, people will say, oh, it's good to have 15% in your portfolio. That's the hedge. Obviously, right now, Darren, I'm sure you agree, a lot of people are putting in a lot more than 15% at this time because, as you said, where can you trust putting your money right now? And that's what really gold and silver bring to the table, is this idea of trust. They are trust where there is no trust. They are trust when you're not sure what to trust. Because again, it's a hard asset. It's something that you bury an ounce of gold, and 2,000 years later, you pull that gold out of the ground, and it's still there. It's the exact same thing, right? You're not betting on which computer is going to do well, which cryptocurrency is going to do well. You don't know what the technologies are going to look like 10, 15 years from now. You don't know what the world is going to look like 10, 15 years from now. But one thing you do know is gold will still be an ounce of gold. Mm-hmm. It'll still be an ounce of gold in Canada. It'll still be an ounce of gold in India. It will still be an ounce of gold in China. Whether China is a communist country in 15 years or whether it's a democratic country in 15 years, we don't know. But one thing you know is that gold is still going to be gold. Silver is still going to be silver. It's still a resource that is difficult to pull out of the ground. It takes blood, sweat, and tears. It's a limited commodity, and therefore its value has continued to rise through the ages. So it's very important that when you're looking at doing this, that you're acquiring actual physical precious metals, and that's exactly what we deal in at Guildhall. Again, the motto is, if you can't hold it, you don't own it. Give us a call, 1-877-8-SILVER, the website guildhallwealth.com. We'll be right back with The Real Money Show on Global News Radio, 640 Toronto. And we're back with The Real Money Show, the phone number 1-877-8-SILVER, the website guildhallwealth.com. Darren, I think we've covered a lot of different topics today. We've done a great job, by the way, of sticking with the precious metals specifically. I know a lot of the time we bring up different subjects and different articles about what's happening, but sometimes it's nice to just talk about the metals themselves. You know, we've talked about how they hedge against inflation. I truly believe that the silver is incredibly undervalued if you can get your hands on it. We do have some physical metal at Guildhall, so definitely call us about that. We talked about some of the ways that you could get involved, the idea of the stock market being a V-shaped recovery, and at the end of the day, it doesn't really matter. Precious metals can still do well. And we also talked about the opportunity right now of holding physical metal as just a general hedge, just as a way of having trust in a world where it's very chaotic. What would you say to sum all of these arguments up, and what are you thinking these days about the metals and the metals market? And maybe if you can share maybe some stories that you're hearing from clients right now.
Well, there's concern. I mean, it's deeper than it's been. In the last year, we've gone from isolating arguments about the possibility or threat of a bubble bursting, too much credit being issued around the world, to the realization that our government's going to be tasked with figuring out how to pay this debt off. We're going to have around 250 to 300 billion worth of new debt. There's tons of mortgage forbearance out there. It's worth about 4.2 billion if anyone's counting right now, and nothing has approached this level of household, employee, or business support in terms of the amount of money dealt out in a short period of time ever in the history of Canada. So if you compare it back to 2008-9 in the financial crisis we had, Ottawa shelled out by comparison just a little more than 50 billion. That amount is being spent in Canada now on a monthly basis. It's ridiculous. So Jeremy, you're right. There could be a V-shaped recovery in the stock market, and Bay Street and Wall Street get back to the norm, and those that have good balanced portfolios working with professionals they trust, they could have done really well not to panic this time around so far. But that's not to suggest that we've come out of this without seeing any long-term residual impacts. We have yet to experience what's going to happen in the housing market. We can make the argument that there could be deflation, and as you said, we know inflation is very supportive of metals pricing, but we now are delving into this side of deflation where historically, if you isolate the things we've seen happen in different markets where deflation has become a reality, gold and silver have done well in those too, because it's picking up on the idea that whenever something becomes extreme, gold and silver is the insurance that's there to protect, and that's been 1,000+ years. So when you're thinking of getting gold and silver, remember, you can take it home, you can buy it and directly have it shipped to your house. You could definitely put it into storage, and you can make changes to that simply by making a phone call, and you can add and subtract, go and visit your product. It's always physical. It's always there. You have your inventory numbers, or you can put it into a registered account. As we said before, it's very easy to get a TFSA opened. If you've never had one before, put in as much as almost $70,000 now, and you can go ahead and buy gold and silver with it. You can do that in an RSP or even use existing funds. So if you've got something that doesn't feel comfortable, you've got something that's not working, or definitely something in your portfolio that's not making 10% on average per year, maybe gold is a good candidate. Gone are the days and the age of where it's cumbersome, where it's not, where they say it used to be hard to buy and sell. We don't think of it as a dividend asset. It's there because it's insurance. It's there because under these conditions of uncertainty as to whether things are going to be good or bad, it's the right thing to have in a portfolio.
Yeah, we've got people who buy on a regular basis and the products immediately ship to their sub account at the vault, and then they get their transaction summary report to show that that product has moved into their sub account at the vault. And it also makes it very easy to just end up selling at the point when you decide it's the right time, or you're rebalancing a portfolio. I just think, Darren, ultimately that the precious metals are incredibly undervalued at this point. I think the fact that there are shortages in the market is just an indicator that now is the time where people are getting involved, and the fact that the paper price is low, premiums are a little higher, but overall you're still able to get it at a very reasonable price. And some people think, oh, gold is expensive at $225 an ounce Canadian. But wait till you see where it goes, because people have a hard time picturing the numbers that you were throwing out, that the Canadian government is just throwing out into the ether there. So people have to realize the numbers are just going to get bigger and bigger and bigger, and you need something to protect yourself. And that's really where the precious metals come in. So we hope this has been informative for all of our regular listeners out there as well as some of our new listeners out there, and we welcome you to the party. Feel free to touch base with us at 18778-SILVER and the website guildhallwealth.com. Ask for a package, ask for some information, get onto the newsletter. If you haven't heard some of the previous shows, you can go onto YouTube and listen to some of those past shows that we've had and get a sense of what we're all about here. But it's been great talking with you today, Darren, as always. I know we chat all the time, of course, but we love doing the show. So any last comments?
I think this is the time where you really want to delve into this market a little deeper. If you were thinking maybe putting, 5 or 10, maybe think about 10 or 20. I think this is the time to really do it. Take hold of your wealth, guide your future, self-direct the outcomes, and be a champion of things like this that can do well for you in these uncertain times.
Well, we'll be back next week. We look forward to doing it again. The number 18778-SILVER, the website guildhallwealth.com, and you've been listening to The Real Money Show on Global News Radio, 640 Toronto.